Greetings, folks. You've reached DC Investing. I've reached financial independence, and I am trying to share some knowledge with other folks, and I hope to help others reach financial independence. Um, there's a famous statement by Warren Buffett that says to be fearful when other people are greedy, and to be greedy when other people are fearful. And in that spirit, today I wanted to talk about uh, a pipeline company that I'm aware of that is called Oneok. The ticker for that is OKE. And I believe right now is a time where other people are definitely fearful about the stock. So today I wanted to kind of talk about some of the things that are going on and some of my impressions about this one. Um, this isn't financial advice, but it's an opportunity for you to take a look at Oneok and judge it for yourself to see if, hey, might this be an interesting investment that you might be interested in. So I guess the first thing that should be talked about is that they just had earnings that came out, and the stock dropped right after earnings. It fell about 7% one of those days, and then kind of recovered a little bit. Today it kind of recovered a bit and then fell back again. This is August 1st, by the way, 2025, and so there's kind of uh, some confusion on the earnings, because some folks say it wasn't a good earnings report and others say it was a good earnings report. And if you want to find out more information, just do a YouTube or not a YouTube, but a Google or an AI search on it and look up Oneok earnings disappointment, and AI kind of gives you a summary of what's going on. I think the downsides were that management kind of gave a slightly lowered guidance for 2026. I think they're predicting some lower spreads on some volumes or a few other things. So that could be one of the reasons why the stock went down. I think they also had a little bit of their natural gas gathering segment was a little less this time. But there's several items that were positive. The company is growing, and the revenues are going up, and there's a whole list of positives. And so it's kind of interesting right now. It's a time when it looks like people are fearful because the stock has definitely dropped, but it might be an opportunity at this point for you to pick up some shares at a discount. And kind of looking at the stock chart over the past year and a couple years and even back 20 years, over this past year, right now, Oneok stock is below where it was all the way last year back till about February. And so if you bought shares today, you'd get a price that everyone was willing to pay more for through the whole last year and a half. So it could potentially be undervalued there. If you look at the graph, you'll notice that the price appreciated a lot in November, and that was after Trump won the election. A lot of oil and gas things kind of had a positive increase there, and I noticed that the pipeline midstream sector just kind of went crazy after that. Oneok, it almost went exponential for a little while, and looked like a AI growth stock. So that's not really typical for what these pipelines do. And then it fell back to reality. It had another crescendo kind of towards the end of January, right before Trump took office. Then it kind of got to normalize, and then just like many things during the tariff tantrum in April, the bottom just fell out, and this thing dropped quite a bit, and it really hadn't recovered during the past several months. I do own this stock. I'd kind of been buying it because it looked like a good deal, and earnings came out and it dropped even further. So it could always be a dividend trap, but I think this company is a growing stock, and one that might be an interesting thing. I'll probably add some more to it. So I ended up with more of these shares. I did own it a few years back, and then they bought two other pipeline companies that I also owned. They bought Magellan Midstream Partners, which was kind of more of an oil stock than a natural gas stock. But as I've heard, Oneok was trying to kind of diversify their portfolio, so they're not just in natural gas. They're also, they have other segments to kind of equalize out the type of revenue, and depending on the market. commodities market at the time, oil might do better than natural gas at some point. And then they bought Enlink midstream. I owned that one. And so with both of these, I ended up getting shares of Oneok. So I just kind of held on to them. Oneok pays a dividend. It's decent. It's not as high as some of the other midstream pipelines. Well, the master limited partnerships are higher, but the normal stocks are kind of around this range. So like Kinder Morgan and Williams are in the same area. Oneok pays, I think today I looked it up and it was 5.5% of a dividend yield. I'll leave that information down below along with PE and some other items for you to kind of look at. You can always look these up, but it's compared to the S&P 500, this pays a whole lot of a higher dividend. And so if you have $1 million of Oneok, then you get $55,000 a year, which kind of can help you on your FIRE journey for financial independence, retire early. If you have $100,000, this pays $5,500 each year. So it's definitely a dividend player and one that you can use to create income for yourselves. I have a fun graph that I found in one of their presentations that kind of showed how the dividend has increased over the years. Back in the year 2000, they were paying about 31 cents a share. And then here in 2020, the end of 2024, they were just under $4 a share. So that kind of shows how a dividend payer can really work over the long haul. If you were retiring in the year 2020 with 31 cents a share, just by holding on to those 25 years later, it's your dividend is 10 times as much, actually more than that. So that provides income or would have provided income to a retiree who was trying to, not have to work and supply life for themselves. So, it's a fun table. Also, the stock appreciates over the time. I don't know, how it would compare to the S&P 500. It had a couple fits and starts over the past 20 years in kind of the lead up to 2013. A lot of the oil and gas companies were doing gangbusters. All the prices appreciated, and then the floor fell out from underneath oil, and the whole industry went down for a number of years. So about 2013 and on, there was really kind of a recession in the oil price. So Oneok stock fell during that time. Then they kind of came back up again towards 2020. But then the pandemic just ripped the floor out underneath the stock again, and it kind of cratered. And then it's kind of been coming up further. And if you kind of look at a long-term graph, right now where the stock price is about the price that Oneok was just before the pandemic happened. So if you look at that, kind of think, well, it's been trading at about this range for a while, but and since 2019, 2020, early 2020, 2018, but Oneok is a much bigger company now. So that's another item that could say, hey, it's actually a bigger company and could be undervalued because, they've bought other companies since then, like Magellan and Enlink, and there's a couple others they picked up too. So it's a bigger company, yet the price is kind of similar to where it was in 2018, 2019. So, it's something to take a look at on the technical charts. As I look at what I think might happen with this company, I'll post a picture of where the pipelines are for this company. They're primarily there's a lot in Texas, Louisiana. Then they kind of go up through multiple states, kind of in the middle of America, and they get their income, a lot of it by dealing with natural gas. And so some of the things that I think that are potentially happening, of course, the AI data centers is a new push. They do have some of that information in their investor presentation. There's several data centers that are candidates in Louisiana, in Texas, in Oklahoma, and the AI folks want to locate their data centers near where the gas gets produced so that they can run natural gas turbines to generate electricity for those. So that's it. Oneok would be one of those that would move the natural gas to those locations. So that's definitely moving in their favor. And then there's been a lot of new housing that's been built in Texas over the last while. I'm not sure about Louisiana, but maybe there too. And just kind of thinking, all of those houses are going to need energy. I've heard stats lately that the house prices are kind of crashing in Texas because they overbuilt there. I'm not a real estate expert, but regardless of what the housing prices do, someone is going to live in all of those houses, and the multi family apartment buildings. Once they're built, someone is going to live there, and those folks are going to use more energy, and so they're going to consume gas for water heaters and heat in the wintertime, barbecues. If they have those natural gas type barbecues, or even driving to and fro those places, so to where they're living. So in Texas, they're definitely going to be using more energy because of the growth spurt that's been happening there. So that could be a positive for Oneok. They've got a few more longer term projects that are coming online over the next little while. So there's definitely positives out there. Now, negatives, if the world goes into recession, less energy is going to get consumed, so that could work against Oneok. If you have a natural disaster, like a giant earthquake that can shatter pipelines, that would be a potential disaster. I'm just kind of trying to think of anything that could happen to there. You could get some bad regulations. I think that's less of an issue with Trump than potential other candidates. But overall, I think Oneok, they have thousands of miles of pipelines, that critical infrastructure for the United States that we have to move energy around. They have definitely grown over the past while. Their earnings report shows that they are increasing in volume, in revenue. But as of right now, there's a slight downtick after their earnings, so it might be a good advantage to you. Now, I read today the Morningstar report. They kind of scratched their head a little bit and said, we think the stock is underpriced. I think it was around $75 today. And Morningstar was estimating that they think the price is closer to $100 per share. There's a few others that are also kind of up around that $100 a share, different rating agencies. Some kind of move their price up or down a little bit after this earnings report, but they still project that the price goes up. So overall, those are all some things to think about with Oneok. Thanks for being a subscriber here. I'm a new channel. I think I have 21 subscribers right now, so I appreciate every single one of you. I'd be curious. Comments help channels, so I'm wondering what state or what country each of you is in. So if you wouldn't mind, leave a comment, just say hi. If you like the channel, that's great. Appreciate it. I'll be doing more things as I can about just things that can help you reach financial independence. And this is a fun dividend payer. It's pretty solid. It's raised its dividend for a lot of years, and it might be a nice time to pick up shares right now because the stock's lower than it has been. So like, subscribe. We'll see you. Bye.